Good afternoon, it's 1 o'clock and time for the Wall Street Crossover Show, sponsored by Admiral Markets and co-presented by their market commentator, Darren Sinden. Good afternoon, Darren.
Afternoon, Zach.
One or two things on people's minds in the market at the moment. In fact, only one thing on people's minds, and that's the number which is going to come out in about half an hour. Yes,
US employment numbers, or non-farm payrolls as they're commonly known. Much has been made of this number coming as it does in a month when, just after a month when the Fed didn't meet and 2 weeks ahead of the next Fed meeting, and it's seen as perhaps the pivotal point to finally decide whether the Fed will do anything in September or will sit on its hands and wait till later in the year to raise rates.
Is this genuinely an important turning point? Is it the most? It's obviously one of the highlights of the year, and it will always be, and it'll probably stay as that. But in terms of, we haven't had a rate rise from the Fed for 10 years or something like that, and then post financial crisis, is it pivotal?
It will. The actual data itself isn't. No, the sentiment that surrounds it might be. The Fed obviously relies on more than just one data point. It's got a much deeper, richer set of numbers that it looks at. What it could do, I suppose, it's probably easier for the number to disappoint and to give the Fed an excuse not to do something. Right. If you get a very strong number, then the market will be clamouring to some extent for them to move. It's very difficult to call. The worst.
That's actually why I asked you, just to put you on the spot. But it is something that, in a way, people who are trading here in the market, they do want, they would like to hear a decent summary of what the whole situation is. But we'll go into that in a minute. Let's just go over to the data released over the European session.
Okay, well, a couple of data points caught my eye this morning. First of all, French consumer confidence came in at, for August came in at a read of 93, below forecast of 94, and bang in line with the prior read of 93. So no obvious improvement there in the sort of mindset of the French consumer. And then perhaps more worrying than that number, German factory orders for July, this is the month-on-month number that we look at here, came in at minus 1.4%, and that's massively lower than the forecast contraction of minus 0.5%, and obviously way below.
So total car crash, literally a car crash, given we're probably looking at the automobile industry there.
Yeah, quite literally, yeah. I mean, it's not good news, and it probably was the kind of thing that maybe Draghi was hinting at yesterday when he's
prior to plus 2%.
Well, that's what I was going to say. Yeah, I mean, it's such a deviation from the prior number in June that you wonder what's going on there. Yeah, I mean, these are the kind of things that will, as I say, would have been keeping Mr. Draghi and his colleagues in the.
Plus, this is also a month. This is a couple of months back now. I mean, August would not have been a party either.
No. I mean, one wonders what the number will look like. For August when we see that in a few weeks' time. And then the other big news, or the big talking point more than anything, G20 meeting being held in Ankara, Turkey, gathering of the finance ministers and central bankers from those countries. There'll be many things on the agenda, but just to sort of set the scene, the IMF came out with a statement and it flagged the China risk to global growth, and it emphasised, as far as it was concerned, that there was no need for rate rises in developed economies. And I think when it mentioned that, it was specifically thinking of the UK and
there are only two really developed economies there, but only two economies actually thinking of imminently raising rates.